Hello everyone, it is Evan from the Trade Risk on Wednesday, July 1st here with a market recap video. We're first going to spend some time analyzing the health of the market. We're going to get into some other markets, leading sectors, and then finally some trade ideas. Now a quick note, the US equity markets are closed on Friday for the 4th of July, so that means tomorrow's action will be the final session to close out the week, and a lot of these weekly bars are going to be very important this week, just given some of the recent action across markets. Let's look at the SPY here, and this is a daily chart we're looking at. So most importantly, on Monday's session, we broke down through support, through some pretty important support. 208 has been an important inflection area going all the way back to the end of 2014, where the market ended up stalling and topping out for a few months. It also played as a bounce area for most of April, May, and then once again in June. So the fact that we're back below it is, you know, sort of a more bearish signal, and we want to see price reclaim that level to get a little more excited on the long side. Now, today's session was impressive by the bulls, up almost 1% in the SPY, and we managed to hold those gains, which was very important. But I'd argue that the real test is going to be tomorrow's session and how we follow up basically today's gains. You know, taking a step back and looking at this recent action, Monday is when we had this big potent 2% down move, and that move came after 4 or 5 days of downside action prior to that. So if you didn't get kind of worn out or stopped out in last week's kind of bleed lower, then they really sort of capitulated you out on Monday. Now, so Monday's session, I would argue at the end of that session, we were oversold on a lot of metrics, and I know that probably doesn't mean a lot to a lot of people. It doesn't mean a hell of a lot to me either, but we were pretty stretched to the downside. So if you wanted to take some shots on the long side for some things that were holding up decently, I think Monday's session you could have done that. Arguably Tuesday's session you could have done that, even though it was a relatively uninspiring session. And then with today's bounce, I think you want to sort of, if you were playing a tactical game of trying to get some long exposure in, I think you wanted to be out of a lot of that today. You wanted to reduce, just because I think as you head back into 208 and these declining fast moving averages, it's going to be a pretty tough fight, and there could be a lot of chopping around here, and you still have a lot of headline risk in this market. So I think going forward, it's flip a coin. You know, we could be up another 1% tomorrow, we could be down 1% tomorrow. It just seems very unclear to me. If we look at a weekly chart, you can see what's going on here. So we've been grinding higher, stair-stepping higher for, you know, almost 10 months now. But what you can notice with this week's candle is you're starting to see these fast moving averages starting to roll over and head downward. So that is a slight little warning sign right now. Again, still hardly any real tremendous technical damage yet, but it's, you know, of course it's going to start somewhere, so it's something you want to be aware of. And again, just look at what this candle's looking like, a very indecisive candle. So again, tomorrow's session I think is going to be very important. If we rally another 1%, all of a sudden this candle doesn't look so bad, but if we fall 1%, then this looks pretty bad. So let's go back to some other markets here. The IWM. Now this is still holding up the best relatively. Of course not today. It was only up 31 basis points today to the SPY's I think 86, but still, if you look at a weekly chart, you can see a lot of these fast moving averages still in very bullish formation, heading higher. So there's really no technical damage here. The Q's not as bad as the SPY either. You can see it's basically we're right on the 20 EMA right now on the weekly chart. So SPY is certainly the weakest of these three, and then the small caps are the strongest. So still sort of a mixed bag. I think with this recent action, you need to be more defensive. You need to lighten up. For me, myself, my portfolio, and what we've done in the trade risk, we did take some shots on the long side yesterday, but we did sell out of a lot of our gains. The only thing we're still holding on to is our FIT, and we do have some weekly stuff that's on that we've had for quite some time, but our exposure right now is very light. 15-20%, and I think I'm certainly comfortable there, just given the recent action that we've seen. Let's look at some other markets. TLT will be first. This one got hit today pretty hard, back down to these lows. It's still struggling to stabilize here. You certainly don't want to see it get too much further. You don't want to see follow through if you're a bull here. The fast moving average is still heading lower. Not too much to say. It's still a lot of momentum to the downside on multiple time frames, so you got to be careful with TLT. USO, this one really got hit today as well, down almost 4%. So we're finally starting to see it lose this $20 magnet level that it was holding on to for some time, and this perhaps could have a date with these lows again down here at 1680. Still could take a long time to get there. Again, zoom out, you see the big long-term downtrend that we've been in for a year or close to it, and it's no surprise this is going to take some time to heal itself. Natural gas, didn't get hit as hard as USO today, but still down 1.7%. Getting pretty tight in here. Let's see which way it wants to run. Either a date again back down with these lows, or if it can break to the top end of that range. Not too exciting for me one way or the other. Gold is heading back down to the lower end of its larger term range, not interesting, and silver is testing it right now. So this is a big test for silver, especially on a weekly chart. You can see perhaps we're in store for some continuation lower. Perhaps the dip buyers will step in again. That one could be interesting there, depending on your time frame. Now, some of the leading markets, again, I don't think much of this has changed. The IBB still from a technical standpoint is still one of the strongest. Let's look at a weekly chart here. You can see super bullish alignment in all these fast moving averages, barely any damage done. In fact, you could argue there's no damage done right now. So just a pause in the action with last week's candle, and where we are right now, where we're down less than 1% on the week. So IBB still where a lot of strength is. Healthcare is still where a lot of strength is. Weekly chart again still shows a pretty bullish picture, and then the discretionary stocks are still holding up pretty well. As additionally, you can see still been holding this rising trend line. 77.15 has been a breakout level, reclaimed it today, outperformed, up 1.14%. So that looks really good there. Let's get into some other. Actually, let's get into some individual names. Apple is first. You can see Apple, we talked about this trend line now for quite some time. We got the breakdown below it on Monday. Tuesday, just a little inside day, and then we saw a nice pop today in Apple, closed right on this trend line. So let's see what happens here. This is a pretty important retest of this trend line. Let's see if Apple can get back above it and continue higher, or if it's going to roll back over. Could be, once again, an interesting short, but Apple doesn't seem to have a ton of momentum one way or the other right now. It's still just 2 steps forward, 2 steps back type of thing. So let's see if we get some trade signals out of that coming up. Google, just in a range, nothing too exciting. Netflix, so that has looking like it's trying to go sideways here a little bit at around the $650 to $700 range. We know the 7-to-1 split's coming. We had the Icon news that he sold out of his stake in this name, so perhaps that's enough, those two events, to potentially just cool this one off and move sideways for some time. Moving averages are still supporting price here. Not too much to say. It's not too actionable to me one way or the other, so I would just need more time in Netflix before getting too interested. Amazon still kind of doing its thing, grinding higher here. Not too actionable one way or the other. Facebook trying to get going again today. It was looking pretty good intraday, but that certainly got faded, but still it is above all the fast moving averages. You had a nice 3-day pullback from this big move higher if you wanted into it. So let's see how it holds up. Nice session today, outperformed. I like Facebook, but it doesn't look like an entry for me right there. Twitter, this one had a really nice day yesterday, up I don't know what it was, 6%, almost 6% yesterday. Cooled off a little bit today. I think it's, it looks pretty actionable here above this $36 level. I think you would get a nice little momentum pop above there. You can see this could be potentially a little double bottom scenario here, with this being the first pivot off of this 33.50 level, and then we got as low as $34 before we ignited higher yesterday. I know there's rumors, news, whatever you want to call it, but you know, price action ultimately is what I care about, and above 36 bucks looks like a quick trade might be worth it. Again, you still have damaged goods from longer term perspective. Alibaba, this one continues to just slide. Nothing's changed here. It did successfully fill this gap here from earnings. It's back to the lower end of this range. These are effectively near all-time lows in Alibaba at you know, basically, you know, at $80. So keep this one on watch. It looks doesn't look ready at all, but let's see what happens with it. I don't think you know, I don't see it turning around anytime soon, especially with the alignment and positioning of a lot of those fast-moving averages. GoPro, so ever since it snapped this rising trend that it was in for a few months, it's starting to just slide lower here. So we're looking, if we look back at it, maybe, you know, zoom out here, you look at a bigger, longer-term perspective, you got this nice impulse leg from $37.50 all the way to $60. That's a hell of a move. So even if we came back down and tested $50, put in a higher low, and started to reverse higher, I think that'd be very constructive in GoPro. So doesn't look like I'd want to touch it on the long side just yet. Let it kind of pan out, move sideways, show some strength, then look to get back involved in it. So some trade ideas for the rest of the week, or for next week, given there's only one day left. TWC, I like this one a lot. I almost took it at the end of the day, but I just didn't want a lot of, I didn't want more long exposure basically in my portfolio, so I passed on it, but it does look really good, holding high and tight, series of gap higher, and now it really started to ignite, especially at the end of the day. That started to pick up a little bit, so I like TWC here. I think it looks good, and that one is something you should look for further strength. RYN, this one not necessarily my cup of tea. It's been beaten up for a while, but I like it above 26.15. It had a little bit of a move today out of this flag. Nice igniting bar, up almost 2%. Keep this one on watch. It definitely has been beaten up for quite some time, but it could be an interesting play going forward. CVS is another one. This one's had a lot of strength as of recently. It's in multi time frame uptrend. Look at this weekly chart. It's just been a monster for multi years, and had a nice push higher. Cleared this 104.75. It managed to hold it. Let's see if it can get back above 106 or so, and then it can attack these previous highs there at 107. I think CVS looks pretty good. May need a little more time. And then finally, for the long side, JACK, J-A-C-K. Look at a weekly chart first. You can see super clean uptrend for multi years. Again, it's been cooling off since January of 2015 of this year. Or actually, I'm sorry, since February of this year. It's been kind of just consolidating, flagging out, and it looks like it's getting tight enough where you might see a directional move kind of ensue from this tight price action. I think getting back above $88, $80, $89 could set that one in motion, so keep that one on watch. On the downside, on the short side, I have two setups for us. Loco, LOCO. This one's been weak, staying weak. It's been tight down here between this $20 and $20.50 and $21 level, and it looks like it wants to close on the lows, underperform today. Looks like it may want some more downside here. These are almost all-time lows for Loco, so that one could be interesting if you're on the interested on the short side. And then finally, MRC, just one other short setup in the oil and gas services sector. This one, you know, it's trying to had a nice move basically since February to the upside, but now it pulled off the highs. It's going sideways and it's trying to break down again. So it looks like maybe it just needs more needs to head back down to the lower end of this range, or you know, cool off a little bit. We'll see. Again, not my favorite type of setup, but some of you guys might find some interest in that one. And that's it, and that's all I have for today. So hopefully everyone is managing these volatile times in their account, but I think if you stick with it, honor your stops, discipline, stick to your process, you will make it through. So as always, thanks for watching, and I will catch you next time.